Good evening, everyone, and welcome to today's market wrap-up. Let's start with a quick snapshot of the global market close. The QQQ, tracking the Nasdaq, finished at $644.33. The SPY, representing the S&P 500, closed at $704.08. The VIX, the market's fear gauge, edged lower to 19.18. The yield on the 10-year Treasury note moved down to 4.29%. Meanwhile, the US dollar index strengthened to 98.48. In the commodity space, WTI crude oil surged, settling at $91.33 per barrel, while gold came in at $4,759.10. Of particular note, Bitcoin put in a very strong performance, rallying to around $78,419. So, what story is this data telling us about market sentiment? My read is that we're seeing a divergent picture. On one hand, Bitcoin's jump of over 3% and the drop in the VIX show that risk appetite is warming up, with money willing to chase higher risk assets. But on the other hand, the stronger dollar is putting pressure on global liquidity, meaning capital flows are highly concentrated, not broad-based. Putting it all together, the main theme for today is choppy but leaning positive, with a probability around 68%. Capital is primarily flowing into two areas, the cryptocurrency ecosystem, led by Bitcoin, and the energy sector, driven by geopolitical tensions. Let's zoom out and look at the global capital flow path. During the Asian session, China's Chi-Next index rose 1.73%, significantly outperforming the main board, which confirmed the return of risk appetite. European equity futures early in their session continued this positive sentiment. Therefore, we judge today's capital flow path to be one of continuation, with about a 65% probability. However, there's a key blocking risk here, the US dollar index. If the DXY continues to strengthen and breaks above the 99.00 key level, it could reverse the risk appetite in non-US markets. Now, let's break down the underlying macro drivers. First, interest rates. The decline in the 10-year yield eases valuation pressure on tech and growth stocks, which is a positive for risk assets. Second, the dollar. A stronger greenback is a headwind for non-US assets and some commodities. This is the biggest macro hurdle for the bulls right now. Then, inflation. The sharp rise in oil prices, up over 3.5%, is heating up reflation trade expectations, directly benefiting the energy sector. And the core driver for oil's rise is the tense geopolitical situation in the Middle East, which is providing a risk premium for crude. Based on this, let's frame the outlook for key asset classes. U.S. equities are leaning positive, supported by lower yields helping growth stocks, though a strong dollar eats into multinationals' earnings. Chinese A-share sentiment is positive, primarily domestically driven, as evidenced by the Chi-Next leading the gains. Bitcoin is a clear risk-on signal, its independent rally is attracting global speculative capital. Commodities are diverging, oil has dual premium support, while gold faces downside pressure from both dollar strength and improving risk appetite. Consequently, the two clear capital themes right now are, first, cryptocurrencies and related equities, with a high probability and high continuity for going long. Second, energy and the reflation trade, with a moderate probability for going long, but highly influenced by geopolitical news flow, implying greater volatility. From a trading perspective, we need to watch a couple of high-frequency flashpoints. First, the tone of remarks from Fed officials. Any more hawkish than expected comments could quickly push bond yields and the dollar higher, pressuring tech stocks and crypto. Second, news flow from the Middle East. Any signals of de-escalation could lead to a rapid unwinding of oil's risk premium. On the risk side, focus on two failure conditions. First, if the dollar index decisively breaks above 99.00 intraday, it would invalidate the thesis of improving global risk appetite. Second, if the Nasdaq 100, via the QQQ, fails to hold support at $640, it would signal weak buying interest in tech, potentially returning the market to a weak, choppy state. Therefore, today's strategic bias is to cautiously go long while controlling position size. A positive signal would be if, after the US Open, the QQQ holds above $645 and Bitcoin remains stable above $78,000. If the dollar index falls back below 98.20, removing the macro headwind, one could consider increasing risk exposure on the crypto and tech growth themes. However, if Bitcoin breaks below $77,000 or WTI crude falls below $90, it suggests the momentum in these key themes is fading, warranting a reduction in exposure. The stop-loss condition is based on closing prices. If the QQQ closes below $640 or the DXY closes above 99.00, the strategy is void, and one should exit to the sidelines. Finally, here are a few verifiable predictions. First, the Nasdaq 100, via the QQQ, will close above $645 today. Second, China's Chi-Next index will outperform the Shanghai Composite by at least 1 percentage point. Third, Bitcoin will test the $80,000 psychological level within the next 24 hours. Fourth, WTI crude will hold above $90, while COMEX gold will struggle to reclaim $4,780. Fifth, the market's divergent structure will hold, with trading volume share for crypto and energy sectors rising significantly from yesterday. Overall, our probability assessment for today's market is 45% for an up day, 40% for a choppy day, and 15% for a down day. The market is navigating conflicting signals, but the buying power for risk assets currently holds a slight edge. Investors should focus on the key themes while staying alert and flexible. That's all for today's market analysis. Thank you for watching.